Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, October 18th, 2023. So, the Bulls got absolutely walloped today, and I swear it's almost like that movie Groundhog's Day where you just keep reliving stuff, and the Bulls get all bowled up over nothing, and everybody thinks that it's the start of a new bull market, and shorts get squeezed, and then from there they realize that what they were buying for made no sense at all. So it started off with the whole thinking that the Fed was going to start cutting rates, and that kept the whole rally going into August, which delayed our the top that we were looking for. But then we had the rally off of here because the Fed was going to he wasn't going to be raising rates anymore, and I know people know this. It's not that difficult. It if the Fed doesn't raise rates, it doesn't mean rates are going down. The reason why the Fed was not raising rates was because the interest rates were moving up on their own. So they didn't have to raise them faster. That's not something to be bullish about, because when rates are going up, typically you have the stock market going down because you just do the risk reward. So if you have fixed income that you can get a 5-6% return on it with really no risk, and you're going to struggle to make 4-3% in an up and down market with geopolitical issues, it's kind of a no-brainer. So people just move over into the fixed income, collect a pretty good dividend, and don't worry about their money. That's a lot of what I was talking about with the 5 trillion or whatever on the sidelines that they're looking to come in. A lot of that is never ever going to make it into the market because it's just how old people are. When you're at a certain age, you really don't want to have risks, so you're going to be more in fixed income or in just high dividend stocks. But in any case, so now that's the past where what I'm saying, where the Bulls got bowled up over nothing and got caught, and then we saw the big decline, and then off of these lows, they made it, and I was just saying it didn't make a whole lot of sense, and we started going down, and this is where we are right now, where we had this big move down, and that had to do with basically the war that's starting or started between in Israel, and this was the jump up because nothing happened, nothing escalated over the weekend. And again, I'm just like, people can't be this dumb right now. This is the reason why they're getting bowled up, because over the weekend World War III didn't start. That's not a reason to get bullish on the stock market. And it's like day in and day out. Today there was escalations overseas and geopolitical, and there was kind of just a whole bunch going on everywhere. All different countries sticking their heads into this, and we got crushed today. So it's what I call that chaos and confusion trade, because everybody sells and they get squeezed, and then everybody sells. Nobody knows what's going on. But the one thing that I pointed out in last night's video was that actually when we were here and we had that move up, and I said, we could be forming an inverted head and shoulders pattern, but I said it typically it's used to trap bulls, and the reason why is because it's happening at the top of the run. An inverted head and shoulders pattern happens at the bottom. It happens at lows. It's a bottoming pattern. So when people started jumping in on this trade after we had the gap down yesterday and we went up, and once we broke through it, that's when the bulls got trapped, and then they moved it down. And this is that reverse symmetrical triangle that I pointed out when we were down here, saying these typically don't work because they're on the wrong side of the chart, and they set up with reverse symmetrical triangles. And what that is you have a higher high and a lower low. So it's the chaos and confusion pattern, because people just get washed out. And there's a rhyme and reason for everything that I say when I'm saying I don't have any issues sitting out, when sitting on the sidelines and watching these people run around with chickens without a head, trying to figure out, is the low end, is the top end. Let them burn themselves out. They're going to pay so much in commissions. that we just wait for them to step aside, and then we take the easy trades. And this was the easy trade. It just happened way too fast for me. Now we're going to set up where there's going to be a pattern in place, and to me, I still think we're coming down into my pie zone. We don't have any real bullish divergences in place, and we are oversold, so we could see a bounce, but now we're back down below the moving averages. So these are going to be your resistance zones right here. We're going to have the 43.44 and then the 43.58. This is what the bulls have to get above. If they do, then we could come up and finally close this gap at 44.04. But again, you're just at the top of the reverse symmetrical triangle, and from there, maybe we come down all the way down to that 42.87, and that would match this pattern on it. So I'm not, there's been big moves, and it's just not, to me, if you're looking for a swing trade, this is not the time to be doing it. So you sit and watch, wait for everybody to get exhausted, then you start taking a position, whether it be on the upside or the downside, whatever our predictive analytics model is telling us. And from there, we sit back and make the easy money. So if the bears can take out these lows right here and get below this reverse symmetrical triangle, we're going to be coming into my buy zone. Now, I'm not 100% comfortable right now. Just there's so much uncertainty going on geopolitically right now. Then, on top of that, we have Congress that's in, shambles right now. They can't get a speaker. You have gas that's starting to move higher than what it even was. So that means that inflation is going to start ticking up if it stays up here. And like I said, the environment right now, the bulls don't really have anything to sell the people on the sidelines or the retail public. There's really no bullish case they can throw out except there's $5 trillion on the sidelines, and one day that's going to come back in. You can't guess the bottoms. They're regular lines they use almost every weekend and week out. But in any case, so I want to wait and see. I'm not going to say, okay, I'm buying down here, just because, like I said, there's stuff that could happen that could have us opening up down here, and I'm not really comfortable going to bed with a position where, we could wake up and the S&P futures are down 100 points. And it's, I don't really have anything I could think of that would make them open up 100 points, meaning that, this war in the Middle East, it's just starting. It's not going away. The war with Russia and Ukraine, I mean, that's probably towards the tail end of it, but it's been going on for over a year, so I just right now don't feel comfortable. I still think it's dangerous shorting because you can get squeezed out really fast. But for me, I'm going to wait and see. I'm going to make sure the bottom is in so I can put a stop in place. But, we could come down to the buy zone. If the bulls can get above this, then we're heading up into that 44.04 level. I'm sorry, I went to the wrong chart. So we're getting into the oversold. We don't have any bullish divergences. 15-minute chart here, you can see we do have some bullish divergences. Here's the cross of the moving averages. So this line is now our bull bear line right there. And you can see this is going to be heavy resistance because you can see it's price resistance, and then now we have price support. That is now price resistance, and we have the moving averages. So this is the key. The bulls got to get above the 43.45. If they do, then we can come up to the 43.72 and possibly test these highs. And if the bears can if they can get price below the, let me just check out where we are. Well, if they can break these lows, you can see this has been one of my targets the whole time. It's been the 200-day moving average, which is at 42.72. So these targets have been in place for a while. That's the thing that I'll pat myself on the back because we're going, we went right up into the resistance zone that I thought we were going. We came down. Now I think we're going to come down to the support, and we're going to just kind of be going up and down in this area here. So right now, like I said, just sit back and just enjoy this show because it's It's just chaos all over the place. Nobody has any idea what is going on, whether they should be buying or selling. And our predictive analytics model is neutral. So there's not much that we can really, be doing but watching. We want the safe trades. We want the consistent winning trades. And we're going to miss a couple, but it's not a big deal. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.